Happy Friday to you. Thank you so much for joining us. I'm Marlon Bowling with you, your tour guide to the ag commodities. I am joined by Mr. Brian Hoops. He is the president of Midwest Market Solutions. He joins us from Springfield, Missouri. Brian, always a treat to get to talk with you about the ag commodity markets. Now, today is a little unusual. Why is it unusual? Well, today is unusual because we have our weekly export sales data that is coming out. And we normally don't get that on Friday, but because of the holiday on Monday, it shifted back a day, and we're going to get them right now. Also, keep in mind, this will happen 2 weeks from now as well, after July 4th, because that falls on a Monday. So here we go. Interesting numbers here, Brian. On the weekly export sales, we had corn back up at 1.03 million tons sold last week. That's very intriguing. We didn't have that many flash sales, I didn't think. Anyway, soybeans came in at fairly paltry 294,300 tons. Soy meal actually had some net reductions for the old crop, but we did have some new crop, and it averaged out to 34,100 tons all in all. Soy oil, 1,400 tons, and the wheat had a total of 477,800 tons. And it was all for the 2022 and 2023 marketing year. Had numbers also for grain, sorghum, cotton, and rice. Grain sorghum, fairly hefty amount compared to what it has been running, 94,300 tons. Upland cotton, 293,500 running bales, and the rice, 23,000 tons sold last week. As far as the overnight trade goes, let's take a look at where we finished up. Janet alluded to the fact that we had higher trade this morning, and boy, we did. Now, July corn, again, I'll remind you, the July options are expiring today, so July can maybe do some funny things. Most of your volume is out in September already, and we had July corn 4.5 higher, but September 13.25 higher at 6.80, about 2 cents from its high of the overnight trade. December corn, 15 higher at 6.70.5. Look at that, about 19 cents off of its overnight low and within 2 cents of its overnight high. With these quotes provided by bar chart, we have July soybeans up 11.5 cents at 16.04 3/4. All the other contracts about 10 to 11 cents higher from there on out. In the wheat, in Kansas City wheat, we had July 19.25 higher at 9.56.5, and September gained 18 cents. Kansas City wheat, we had the July contract 12 higher at 10.17, and September up 11.5. And the Minneapolis wheat, we had July actually 8.5 higher at 10.89, September up 8 3/4. So signs of strength overnight. How much do you think that has to do with the export sales numbers? I'll bet not much at all.
Good morning, Marlon. Yeah, probably not a tremendous amount. You know, we've talked for years about the funds, large speculators getting into and out of massive positions in 3-day increments. Well, we had a sell-off on Tuesday, Wednesday, Thursday. So there's your 3 days. And now that selling has kind of abated, and that allowed the markets to recover overnight. It's also helping that crude oil is a little higher, dollar's a little weaker, so you don't have that real rush to get out of these commodities for being forced out by margin called selling, such as the crude oil market as well. But if you look at these export sales numbers, I think old crop corn kind of gets the gold star this morning. That's the highest sales in the last 7 weeks. A big rebound from what we've seen over that period over the last 6 to 7 weeks. And this is on pace, and in fact, well above the pace to meet the USDA forecast. So it's a great number to see for corn. It probably really won't help us out much, but you know, the soybean number, it's a disappointing. It's a marketing year low, but it's also right where we need to be to reach the USDA forecast. So it tells us in the July supply and demand report anyway, corn sales, soybean sales likely not to be adjusted for the old crop category. Of course, next week, everybody's going to be watching that quarterly stocks and acreage numbers, and the stocks numbers may give us a little surprise. If anything, basis levels are telling us that there's not much corn out there, so we may see a tighter quarterly stocks number next week, which would be bullish for this market, especially old crop corn and soybeans. But today, you know, we're kind of enjoying the fact that we're not seeing heavy selling developing yet in the grain markets as we go into a weekend.
Good observation. We'll take a look at beef and pork export numbers when we come back in just a moment. We're back with Brian Hoops, and we're going to take a look now at our livestock, or I should say our meat export sales numbers that came out last week. Let's take a look. Beef and pork. What did we have this past week? Well, I believe last week we had beef around 17,000. This week it comes in at 11,300, so that seems to be down significantly. Let me take a look here. Yep, it says it was down 36% from what we had last week. On the pork side, 27,600 tons, and I believe that was exactly identical to what we had a week ago. Who bought it? Well, on the beef side, China did buy 1,400 tons, and it looks like Mexico only bought 500 tons of beef last week. Key buyer was Japan at 4,700. On the pork side, Mexico picked up 15,200 tons. Wow. China did buy, but only 1,900 tons, and Mexico was the biggest buyer of pork last week. Brian, overall, what do you think of those numbers?
Well, the beef sales are a disappointment, no doubt. Pork is down from what we've been seeing the last several weeks, so it's probably going to be deemed as disappointing as well. Maybe we don't look at these export numbers so much today because you had some other big reports coming out yesterday. You had cold storage report. I thought that beef numbers was significant because you saw the second consecutive month of stocks decline. Probably tells us that we've seen a seasonal top in the beef stocks. So, some positive numbers there. This afternoon, we'll have the monthly cattle on feed report. Looks to be a record amount of cattle on feed at this time, and that's going to be kind of a laggard to those front months of June, August cattle, but those placement numbers and marketing numbers also look pretty friendly, pretty aggressive marketings. Our steer weights are coming down. In fact, they're the lowest of the year right now after falling 3 pounds in the report that came out yesterday. So some positive longer term numbers for this cattle market. Just these export sales probably going to give us a little bit of a lower opening this morning. I think that initially that's going to be viewed as a disappointment.
Well, let's take a look at where we finished up yesterday, shall we? Let's go to live cattle. When we wrapped up the session yesterday, we had the August contract $1.05 lower. We finished at 133.87. On the feeder cattle, we actually had August up $1.70 at 174.85, but it was about $1 off of its earlier high yesterday, so it had a bit of a wide trading range. Lean hogs, well, they had yesterday's session finishing up with August 465 lower. Wow. 103.67 was the closing price yesterday, and it had been as high as 108.55. Don't know if that cold storage report will have anything to do with that this morning, but it'll be interesting to find out. Brian, thanks for the info. Good to hear from you. And if I don't talk with you ahead of time, you have a good weekend out there. Brian Hoops of Midwest Market Solutions. So, Janet, this could be another jam-packed day in the trade.